started. Good morning, everybody. It's Danielle Clore with Kentucky Nonprofit Network, and we are glad to have you with us again on Thursday for our weekly virtual town hall meeting. Welcome back to those of you who've been joining us, and definitely a big welcome to those who are here for the first time. As many of you know, but for those who don't, we've got Laura Whitaker, our Associate Director. So if you'll wave, Laura, and folks, yes, all right. And then excited to have our board chair with us today, Sarah Razor. Renee had another commitment today, so Sarah has agreed to help us facilitate behind the scenes. So glad to have them. For those of you who are KNN members, we definitely appreciate you, and those who are not yet members, we hope you will certainly join and stand with us. We're happy to work with you to get you engaged. Before we get rolling, a very quick thanks to WellCare, the Greater Clark Foundation, Delta Dental, Traditional Bank, LG&E and KU, Manley Burke, and AT&T for their COVID-19 sponsorship. It's their support that's helping us do this work for every nonprofit in Kentucky, not just our members, but all nonprofits. So we appreciate them. So our agenda today, we've got two great guests. We have Josh Benton, who's the Deputy Secretary of Education and Workforce Development Cabinet, as well as Congressman Andy Barr. So we have got a packed agenda and lots of questions to get to. So first, we are going to visit with Secretary Benton, and he has brought with him one of his staff leaders on his team, Heather Deering, who I think may be backup possibly on some potential technical questions. So wanted to be sure that we introduced her as well. Really appreciate you being with us, Deputy Secretary Benton. Do you mind if I call you Josh? Is that okay?
Absolutely, you can call me Josh.
DS or
you can call me Josh.
Okay, great. Really appreciate you being with us. We know you are swamped right now dealing with all these claims, so really, really appreciate it. So want to dig right in, and if you could just, before we move to questions, just provide folks who on this call are over 100 nonprofit employers, as well as some nonprofit employees. So you've got kind of both sides of the coin here with an overview of the resources that are available to them right now.
Sure. First of all, thank you for having me. I'm glad we were able to get it worked out on my calendar in particular. I know this is a standing meeting for this group. More than anything else, you know, just from my perspective and our cabinet's perspective, we very much appreciate the work that the members of this organization do. I know there's a lot of different things that and groups and initiatives and focus areas that are represented in this, and it's just the amount of work that the organizations represented do is just astounding, and we're extremely appreciative. You know, obviously unemployment insurance right now is front and center, much more than any of us would ever like for it to be. I mean, it's not a, you know, I don't say that from a tongue-in-cheek perspective, but none of us ever want to be in this circumstance where we're dealing with, you know, as of today, over 600,000 Kentuckians who have filed for unemployment insurance. There's just unbelievable numbers that we've never seen before, and we're really, you know, unemployment insurance, and we'll talk about some of the programs and resources that have been made available. We've said this a few times. The governor said this. I've said it. You know, unemployment insurance wasn't built for this. You know, unemployment is not a social welfare program historically. It's a social insurance program, and so it's not intended to be an efficient program. It's intended to be a thorough program, and so, you know, we've all learned a lot about how thorough it's intended to be over the past several weeks. But there are, in normal circumstances, 27 or more different variables that could potentially serve as a disqualifier to someone who files a claim. And you know, most of that is, you know, due to federal law that's been around since the 1930s and has been added to over the years. And so we are in the position to try to make it as efficient as possible. You know, the challenge that provides is that you know, there's a lot of different variables that could disqualify someone. And, you know, the March claims have been discussed a lot, those that are still outstanding. While there's still like 23,000 or so that are outstanding, they still have like 90,000 issues that have to be resolved for those 23,000 claims that we have to sort through and clear to make sure to determine those eligibility requirements. So it's a challenge. We've put a significant number of additional staff to specifically review claims. We know that, you know, as much as we would like to respond to every email and to every phone call, we know that's nearly impossible under these circumstances right now. We get upwards at our call center of around 250,000 phone calls a day. And we know a lot of those are repeat callers throughout the day, but it just doesn't lend itself to be able to respond to every single issue. So we, behind the scenes, are communicating with claimants. We are working on reviewing claims as quickly as possible so that we can process those and get resources out to people who are eligible. So we have, you know, normally one primary unemployment insurance program. And now we have multiple programs that we are administering. You know, some the most common is pandemic unemployment insurance or pandemic unemployment assistance that has been made available for individuals that traditionally do not qualify. And then we also have the additional $600 a week, the 13-week extension that's available for folks. But everybody has to be run through the traditional unemployment insurance program. And so if they are not eligible for regular UI, then we can consider them for pandemic unemployment assistance. Right now, we've approved roughly 100,000 people for pandemic unemployment assistance. And so the majority are still being run through the regular UI program at the moment. You know, as I've referenced, you know, UI is complex, and I know that that pertains specifically to nonprofits. And just to address some specific issues that you know, I know are front and center for all the organizations on this call. It has to do with the guidance that was provided by the Department of Labor, I believe it was last week now, about reimbursing employers and what that process is going, you know, how DOL has designed it. You know, the CARES Act had some language in there about providing 50% reimbursement to reimbursing employers and nonprofits for their UI expenses. You know, but the CARES Act did not provide the specifics on how to administer, you know, that reimbursement. You know, we had a way we would like to do that. It's not the way that DOL provided guidance. We know that the guidance that's been provided puts financial hardship on nonprofits because it requires that 100% payment to the state, and then we have to request the 50% reimbursement and then pay the nonprofits back. Again, that's not how we would like to administer it. We know that any employer right now needs fewer financial hardships to get through this. We're still trying to work through this and see if we can get some alternative solutions. We're talking with DOL tomorrow morning and again on Monday on this issue. We've talked to our our federal delegation about the concerns as well. Even before the CARES Act was passed, we shared the concerns and what we would like to do, as we're in the state of emergency, as we're seeing these significant amounts of layoffs. So we're going to keep working on it. And in the meantime, we're having our team that is, traditionally would, collect those payments, to be prepared for whatever that final guidance has to be. But know that we're still pushing. We would like, I know the letter that you all sent to the governor and copied me and the lieutenant governor at the end of April, asked for an executive order. The challenge with that is that a state's executive order doesn't supersede federal law. And so as much as we would like to, and we'll look for any opportunity that we can to increase the flexibility, because we want to look out for your all's interests as well as ours. Because if, our preference would be to not charge right now, and then for the state to collect the 50% reimbursement so that you all would not be out anything. Because we also have to look out for the interest of the trust fund in these circumstances, and to make sure that we at least are able to get something back in whatever scenario that is. So again, we've seen the guidance. We're still pushing and hopeful that we'll be able to see some flexibility granted. So right now we're viewing it as still being in a bit of limbo. So okay. We'll, as soon as we get some clarity on that, we'll provide, the direction that we're going to go. We'll also give you a primary contact within our Office of Unemployment Insurance that will be communicating with the network, so that there'll be a direct line of communication to our office for whatever steps we have to take going forward.
Okay, wonderful. Well, and to clarify, our real issue on this particular piece is only for self-insured nonprofits. I want to be folks don't get alarmed. If they are paying into the state system, they're not really impacted by this issue. Right. Okay. And so, I know from that letter and in my communication with your office that, we are certainly, and I think you are as well, advocating on the federal level that we get to 100%, and that resolves this entire issue. And of course, we'll have Congressman Barr on next and talk about that. And I think our frustration is certainly the Department of Labor being hung up on that word reimburse, because certainly it flies in the face of the intent of the CARES Act. If nonprofits had money in the bank to wait for reimbursement, they wouldn't be laying people off. So it's really frustrating, as I know you understand. Is there any, with the way that the most recent guidance is written, is there any way to quote unquote buy some time and delay the need for payments while this is kind of sorted out at the federal level, to delay that nonprofits need to pay in, the self-insured again? Yeah,
that's what we're going to be pushing for. To allow us to buy time on this, and because we're hopeful that Congress will, go back to the drawing board on this and make some revisions. And it's just not, this is one issue. It's the same thing with, a lot of the payments that states are having to eat right now because of that reimbursement language, and that's creating, some financial concerns across all the states.
Right.
The last thing we want to do is to have to take out a loan for the trust fund again. But we know that as long as it's a reimbursement situation on a monthly basis, that the likelihood that has to happen increases. And it's not something we want to do. They know how we feel about it, and they know how all the states feel about it. And so hopefully they will buy us that time, especially on this issue with the self-insured, so that it doesn't provide that undue, in my mind and opinion, undue financial hardship for self-insured and reimbursing employers.
Yeah, we're really, I mean, I think that what we're hearing from folks is they would have to close their doors. I mean,
Yeah.
they just don't have that kind of cash. So that's a big concern.
Absolutely.
I know one of the other things I want to be sure we bring up is that historically, a small nonprofit or a house of worship would not have to pay into the state system, and their employees wouldn't be covered at all. But that's changed under this situation, right?
So partly, so they don't have to pay in. So if you were an organization that did not traditionally pay into the system, your employees are being, they're being disqualified more than likely by regular UI and being moved into pandemic unemployment assistance, which is paid 100% by the federal government. So that is not any individual that receives pandemic unemployment assistance that does not come out of the traditional state insurance program. It's being paid directly 100% by the federal government.
Okay. All right. So that is a bright side,
Yes.
I guess, in this mess. Yes.
Yeah,
Okay.
it no doubt is. That includes, the additional $600 a week. Employers, no matter if they pay into the system or not, are not being charged for that. That's 100% from the federal government. The 13-week extensions is 100% federal government as well.
Okay.
So with the expansion of eligibility and the new programs, those primarily are being paid 100% with federal funds.
Federal. Okay. All right. So we have a member question here that they have a couple of employees who are not comfortable returning to work because they're in a high risk category. And so their positions haven't been eliminated. They're simply choosing not to come back to work. They've exhausted all of their paid time off. What are the options for them? It's this employer's understanding that they should not apply for unemployment because they technically still have a job. What's the answer to that? Do you know?
Yeah. So, we know that these are uncharted waters for a lot of folks, having to make some tough decisions. So there are two primary circumstances that an individual can draw unemployment insurance. We would, that employer would have to, consider that individual is being laid off. But if it's an issue of dependent care, so if someone's child care facility or, if it's another dependent, whether it might be an adult with disabilities or a parent in some circumstances where the facility that provided care to them had to close, then that employee has to stay home to provide care, then they can be approved for pandemic unemployment assistance. The same thing goes into effect for individuals that are considered high risk. So that high risk definition that's provided by the CDC for a variety of different health concerns, or it could be an issue of age, that they could go on unemployment, and the risk is the permanency of the job loss. And that's the challenge here, because by law, if someone is on unemployment, any program, that their employer does not have to, hold their job if they call them back to work. So they can stay on unemployment, they can go on unemployment, but once there's a return to work date that's established, that person, that employer no longer has to hold that job for them. And that's I understand not every employer can provide that flexibility of holding the job. But we are able to make the exceptions around dependent care and high risk because of age or health.
Okay. All right, another question. If an employer has been utilizing the e-claim system for their employees who've been furloughed due to COVID-19, but now some of those temporary layoffs will become permanent.
Yeah.
upon separation, will those employees who have now been permanently laid off have to file a new claim for benefits, or is there a way to let you all know that? What is that process?
Yeah, so they will not, I would say under most circumstances, have to file a new claim. You know, right now, most people on unemployment do not have a return to work date. We're going to start to see more of that over the next few weeks as things reopen. We're making an opportunity on our websites where employers can submit return to work dates. You know, when that happens, if an individual cannot return to work, again, for those two reasons that I just mentioned, dependent care or high risk categories, they will be able to say they cannot return to work for these issues. However, if someone's just not called back to work during the course of all of this, you know, their unemployment insurance right now lasts for 39 weeks. And so they will not have to reapply.
Okay. Another question, many of our organizations, thankfully, have been able to secure a paycheck protection loan. And so they have not yet had to lay off or furlough anyone, although they are really coming to terms with the fact that that may not be the reality later this summer once those funds run out. And so you mentioned the federal program that's 13 weeks. Is there any time limit on that? If someone doesn't have to lay off until July, is that a problem, or how would that work?
Not a problem. Most of the new programs have a sunset at the end of the year.
Okay.
The one that does not is the additional $600 a week. That program expires July 31st. Now that's all subject to change, dependent upon how long this all lasts and what Congress decides to do next. But the CARES Act sunsets the additional $600 a week at July 31st. But all the other programs, the 13-week extensions, pandemic unemployment assistance, those are good through the end of the year. Okay.
And I think a similar question that is tied to both of the previous questions is if folks have laid some staff off and then they got the loan and they were able to bring them back, but they anticipate they will be laying them off again, it's the weeks that count, right? The
That's
total
correct.
number of weeks? That's
correct. So the unemployment, we have that all the time where people go on initially on unemployment, but maybe it's because their employer does a temporary layoff, brings them back, and then they may experience that again. So in this circumstance with paycheck protection, if someone was initially on UI and they go back to work, they essentially just stop requesting payments once they go on the paycheck protection. And if and when that paycheck protection program runs out and they need to go back on UI, they essentially just reopen their claim. Okay. And they won't have to go through the process all over again. They will still have time on that initial claim, and it's just the process of reopening it and starting to claim benefits for when they are laid off again.
Okay. All right. And then, this is, I think, an unfortunate reality of the nonprofit sector, and not just unique to the nonprofit sector, is you've got some folks who are making more with the $600 payment than they are at their nonprofit place of employment. And so that's creating a real concern and strain among employers, especially those who are essential and trying to maintain a certain staffing level. I don't know if you have any guidance or thoughts there, but.
So two things. One is that the employer has the right to protest. That has not changed. And so under all of the unemployment insurance programs is the general rule of thumb that has always existed still exists, that someone is eligible for UI based upon job loss of no fault of their own. So if someone just quits, the employer always has the right to protest. that that protest piece has become more narrow with pandemic unemployment assistance. However, we're still, the March claims that I referenced that are still held up, most of them have to do with employer protest.
Okay.
Or some issue around separation. So we know that that's happened, and that's just a hard reality that is being faced right now, that some people thought they could just walk away from their job and go on unemployment. Even with the expansion of eligibility, that still isn't necessarily the case. So there's employer protest. The other side of it is if someone is laid off and their employer calls them back, unless it's those two reasons that I mentioned, because of dependent care and the high risk category, if they don't come back to work and the employer has provided a return to work date, that puts a stop on their UI benefits. And so that's, we get it. The states didn't necessarily ask for the additional $600 a week, but we got them. And we know that that's, presented some challenges for both organizations and individuals when that individual may be quote unquote earning more by being on UI. But the employer has the right to protest a claim, and when an employer calls someone back, and unless it's for one of those two exceptions, and they don't return, then their UI benefits stop.
Okay. All right. Can an employee claim lost wages on unemployment? So, for example, if their pay was cut 50%, can that loss be claimed? Yes. And if so, is the filing process the same?
Yeah, same process, and it can happen a couple of ways. On the initial claim, when they're talking about the reason for job loss, there's a box to check called for reduction of hours. But also, let's say that if someone has been laid off, but they come back to work, but it's for less hours and pay. When they request their payment every other week, they're required to report any wages that they've received during that period. And what will happen is that we'll have to do a monetary determination when it's a reduced wage situation. There are circumstances where individuals make too much, even on reduced wages, to continue receiving UI. But there's potential that if it's for reduced wages, that they'll still receive a partial UI payment.
Okay. All right. The good news is you've got folks in the nonprofit sector who our role is that of helper. So I've had several people say, how can we help? How can we help this office really streamline what's happening and get information to folks who need it? So those are libraries or other folks who are in direct contact with many of the Kentuckians who are filing claims. Is there anything the nonprofit sector can do to help you, Josh?
Yeah, always. I think something we're working on this week is, we were operating in chaos mode just for several weeks, and is to try to, stabilize the operations and, get feedback from our own staff on the common issues and concerns that we're seeing, so we can provide better communication. I wish UI was less complicated. I definitely do. I wish it was more like some of the, CHFS benefits, which were based upon earnings and number of people in the family, and you could just make an eligibility determination and move on. Unfortunately, UI is not like that, but we are trying to identify some of those common issues that we're seeing and provide guidance and get that communication out. You mentioned libraries. Libraries and Archives is in our cabinet, and the public library system across the state has been a strong partner of ours for years, and helping people with UI or to look for work or whatever it might be. And so when we have some updated communication, we will definitely utilize you all and those resources to help get the information out.
Okay, great. And knowing you mentioned the 250,000 calls a day,
Yeah.
if someone has applied and not heard back, what advice do you give them? Should they keep calling? What should they do?
Yeah, and that's a tough one because quality customer service has been a challenge in all of this just because of the volume, both of emails and of phone calls. We're trying to do more mass communication. There's some things that have gone out, especially on common issues. And we did some direct communication to individuals that we needed identity documents on. We did that last week. We did some direct communication to individuals that we feel like was answered some questions incorrectly, so that we were able to do some mass communication to allow them to update their claim. So the biggest thing is for claims that are under investigation. And that's where we get the majority of the questions, and honestly the majority of the calls of people wanting to know, why is my claim under investigation? I think the best advice is that the team that is reviewing those issues will do direct communication to individuals who have an issue with their claim. We're doing that as quickly as we can. As we get emails or phone calls, we try to get those to the people that are working on those claims, because it might have pertinent information to help resolve an issue. So we're triaging that as best we can. I wish I had a better answer on if someone should keep calling. I know the frustration is there. I'm frustrated that people can't get through on the calls and aren't getting their emails responded to as quickly as we all would like. But it's for them to know that we're reviewing it. They're going to get contacted directly when somebody's able to review their claim, and when they submit information via email, we try to get it to the people who are working those issues when they come in. So
Okay.
Unfortunately, it's to keep, probably the answer is keep doing what they're doing. And we're trying to get it to the right people that can answer questions as quickly as possible.
Okay. Now, if an employee is transitioning back to work from unemployment, whose responsibility is it to report that? The employee, the employer?
So we're going to be sending out some communication. It'll go through a variety of networks on how employers can submit a list of the list of employees that they've called back to work. That's going to be going out in the next couple of days.
Okay.
Because in this circumstance, normally, if an employer was laying off, they would give us a return to work date. But we knew that could not, that just wasn't going to work under these circumstances. So we're providing employers the opportunity to submit return to work dates and the specific employees that they're calling back. For individuals, they can also go into their account summary and update their return to work date. But generally, when they go, the general rule of thumb is that when they go back to work, they just quit requesting benefit payments.
Okay.
And that's kind of the trigger for them to stop being paid.
Okay. Now, is there a certain number or things that employers should be using that's different? Does that help unclog your phone system?
Yeah,
or is that
so employers, we're working with them directly. There is an email inbox for employers that our employer and apprenticeship team responds to relatively quickly. It's just workforce@ky.gov. And that is just a a line of communication that employers can get to our staff and try to, so we can help resolve or answer questions as it relates to employers.
Okay. Now, if an employer feels or is aware that an employee received a benefit payment to which they were not entitled, I'm guessing that's the inbox they need to report that to? Absolutely,
and we'll get it to the right place.
Okay. All right, now here comes some acronyms that I'm hoping you know what these mean. KDLA, I'm guessing that's Kentucky Department of Labor. Okay. Have you released information related to IMLS CARES Act funding? First, can you tell us what that means?
Yeah, so that I do not know the specific answer to. I know that, obviously our cabinet is big. we have a lot of different entities within our cabinet. KDLA actually does not report up to me. That's my counterpart, Deputy Secretary Mary Pat Reagan. KDLA reports up to her, and I know that she has been working with them on the CARES Act resources that are going to be available. So I don't have the answer to that, but
okay.
We can get with Mary Pat and follow up to see if we can get that answer to you.
And I did learn, thankfully, somebody helped, Laura helped me figure this out. That stands for the Institute of Museum and Library Science, or Service, okay. I'm sorry, Services. So I guess those are folks who are specifically able to receive some, how the CARES Act had some carve-outs for various subsectors, and that's yes. Okay, gotcha. Okay, all right, well, our chat box, I think we got through everything. That's a miracle. Any final questions folks have before we let Josh go? You can type them in to the chat box to Laura, and then we can pull those up. Any final questions? This has been incredibly helpful.
Right, Danielle, this is Heather and yeah. Josh. If Josh doesn't mind, I'm going to throw one tidbit out. Yeah. You asked Danielle how you all might be able to help, and I've recently become an unemployment insurance adjudicator, so I've learned quite a bit about the process. And I would encourage anyone that you know who is currently receiving unemployment insurance benefits to not file a new claim. Mm-hmm. That would be the most difficult challenge that we have on the backside, is when someone filed a claim on April 1st, and then in 2 weeks when they're supposed to go back and request a benefit check, they actually open a new claim. Okay. And that pushes the cycle back another 2 weeks. So that's just kind of a general PSA that I try to share with everyone, is log in, go back into your actual account and request your benefit check instead of filing a new claim.
Okay.
And to clarify,
go ahead, sorry.
That has been a running theme that has slowed people down considerably, is when they go in and file a new claim. And we have, with all of the changes that we've had to make to our system, it's kind of like playing whack-a-mole with messages. And we know that there have been some messages come up that have triggered people to file a new claim. Wow. And we have tried to state over and over again, even if the system tells you need to, please don't. And we can fix it, but it does delay. And that's a continuous improvement issue that we're trying to stop. We think there's going to be some permanent fixes on that next week. The other piece that I would say is that when someone does file a request a payment, that they're going to be asked if they are able and available for work. And we've changed those questions to say, if not for COVID-19, are you able and available? And we need people to say that they're able and available. That by law, you can't receive UI if you're not able and available to go to work. Okay. And so we, again, are clearing those out, but it does delay those continued payments when people answer those questions incorrectly.
Okay, and to clarify, so again, even if the system tells you to file a new claim, don't do it. Okay.
There's only a certain group of people that need to do that. It's individuals that, their unemployment insurance maybe initially expired, sometime between now and back to July 1, and to request, open their claim back up, they have to file a new claim and open it up again. But everybody else right now, they shouldn't be filing a new claim if they already have one.
Okay. And to clarify that, for, as we talked about earlier, someone who may have been receiving benefits, then goes back to work, then does need benefits again, is that a new claim process?
That as we get into that scenario, that's when people will have to reopen claims.
Okay.
But there's specific scenarios. But if you're just waiting on a payment, you don't need to reopen a claim.
Mm-hmm.
But if it's to the scenario that I mentioned, the people that need to reopen a claim because their UI expired within the last year,
Mm-hmm.
and then we're going to see it more when people maybe have to report wages that they've earned, or they may work for 3 weeks and laid off a week or something. That's when you have to start the process of reopening claims. But if you're just laid off, not working, you're already receiving benefits, or you're waiting for your benefits, you do not need to file a new claim.
Okay. And then on the flip side, and this I think will be our final question, if an employee feels like their employer is somehow committing fraud or not following the guidance of the CARES Act, what should they do?
Yeah, there's a couple of ways that they can report that. There is an inbox for fraud, UI fraud at ky.gov, that they can report that to. Obviously, anytime there's a suspicion of fraud, they can contact the Attorney General's office to make them aware of it. And so, if that's a suspicion, we definitely want that reported. Okay.
All right. Well, Deputy Secretary Benton and Heather, thank you so much for spending time with us today. Incredible amount of information that I know folks have been wanting to get some clarity on. And again, hopefully it'll be helpful to you all as well in lightening the load and the number of calls that we got some of these things addressed. So thank you again so much for being with us today. And again, we're here as helpers. So if there's information we can push out, don't hesitate to ask.
Absolutely. Thank you.
And we're hoping we'll keep working on that solution. I'm eager. I know Congressman Barr is on, and we're going to talk about getting to that 100% next. So thank you.
Yeah, thank you.
All right. All right. So I do see Congressman Barr. Hello.
Hello, Danielle. Good to see you. Hope you're healthy and well.
I am, and I hope you are as well. Are you in Lexington?
I'm in Lexington. I have to unexpected trip back to Washington tonight, but I'll be back Friday night.
All right. Well, safe travels. I can't even imagine hopping on a plane right now. So, well, we really, again, appreciate you being with us and making time, and also for your support of nonprofits, not only just in the 6th district, but statewide. We've got over almost 100 nonprofit leaders, definitely from your district, but across the state. And so definitely want to thank you, and also to your staff who have always been responsive, but are definitely being uber responsive right now in the midst of this crisis to work with both us and others in our community. We really appreciate that.
Well, thank you. And thanks to everybody on the call and your network for stepping up. I know this is a tough time, and you all are needed now more than ever. And I know you all have been up for the challenge, and we just are so grateful to have the nonprofit community in our communities right now.
Well, I appreciate that, and you are absolutely right. We have nonprofits stepped up. That's what we do, and we've got organizations who are certainly trying to focus on their mission, but like any business, they are concerned. They're concerned about financial viability, their ability to survive this crisis, to serve their communities. They're concerned about the health and safety and economic issues facing their employees, and then the health and safety of those, of course, that they serve. And so, definitely we've got nonprofits who are on the front lines, food pantries, those kinds of organizations. And then those who are often overlooked, who are still frontline, those working in homeless shelters, those in domestic violence shelters. And then finally, there are nonprofits who may not be frontline, but we know they're essential. And we know that on the other side of this, we want to be sure that they're around to help our communities thrive once we get past this. So, you know, I know you understand that nonprofits are essential, and we want to, before we get started, want to make sure you know this, that I think you do. Nonprofits are the 4th largest private sector industry in Kentucky. So the economic impact, you know, is important as well. Employing 1 in 10 Kentuckians, and 15% of the sector is employed right here in the Bluegrass District. So over 1 million annually in wages just in your district. So that's another big concern. And some of the questions we'll touch on today are around, you know, organizations who are so grateful for what's been done with a lot of the loan programs, but terrified because we know those won't get us through. So, but I'll let you make a couple comments, and then we'll dive right in with some questions, because again, you've all done some really incredible work in Washington very quickly to try to get relief into people's hands.
Well, again, Danielle, thank you so much. And to everybody on the call representing so many wonderful organizations in Kentucky, we want to thank you very much, because this was such a unprecedented and challenging pandemic that we're all facing. So many families in need right now, businesses in need, people isolated. The challenges are enormous, and we could not do it without the nonprofit sector. And you know, there has been an aggressive, powerful response from the government, federal, state, and local, in collaboration with one another. A big response from the Federal Reserve, executive branch, legislative branch. That's all true. But I cannot emphasize enough how the institutions of private society, the nonprofit sector, the faith-based groups, they have really stepped up, and they are hugely needed. The organizations of civil society outside of the government, we know it's a partnership between the government and the nonprofit sector. And we've had 4 phases of federal response. Much of that does recognize the importance of the collaboration with the private and the nonprofit sectors to respond to the enormous needs out there. And I don't want to give much of an overview, because I think you're familiar with what has been done. But of the 4 responses, the CARES Act, the 3rd bill, was a $2.3 trillion response that does have a lot that could be used and helpful to the nonprofit network. Obviously, there was a big surge in unemployment help. There was, in that 2nd bill, there was a lot of safety net programs that were funded. The supplemental nutrition issues, the unemployment issues, the paid medical and family leave, more funding for seniors assistance, women, infant, and children nutrition as well. And then with respect to the 3rd bill, the CARES Act, quite a bit in there does apply to the nonprofit sector. We were very intentional about including 501c3s as part of the PPP program. And the purpose of the PPP program, while we increased funding by $260 billion for unemployment insurance, while we provided over $745 billion to state and local governments in one way, form, or another, we also wanted to help. We wanted to include not-for-profits, 501c3s, in that small business loan program, because we recognize that some of the donations are not coming in. Payrolls are still challenging. Obviously, you all employ, as you pointed out, a whole lot of people. And so we hope, and I want to hear a report from you, how that program is reaching the nonprofit sector, how the lenders are helping with the not-for-profit sector, whether or not we can weigh in with Treasury and the SBA to make sure that program is in fact working for you all. As you know, it's a forgivable loan program for 8 weeks, so it converts into a grant if it's used primarily for payroll, also for other eligible expenses or utilities, rent, a mortgage interest. It can be used for other forms of overhead as well. But the goal is that it does become forgivable. I won't go into all the details, but I want to just say again, thank you very much, and see if we can answer any questions or respond to your suggestions. Let me just introduce a couple of my staff that are on the call.
Okay.
Hunt Vandertal is on the call. Hunt is tracking your issues very closely, and he's provided me with the materials and your letter. Dan Taylor, and Hunt is my legislative director. Dan Taylor is also calling in from Washington on this call. Dan is my financial services policy advisor, and he can answer a lot of technical questions about the small business loan and grant programs that may be available to you all. Final point is that the CARES Act had, in addition to the loan programs, the unemployment, the economic impact payments, all of that help for businesses, individuals, and families. There's a big section of that bill that, it's hard to penetrate all of what's in that bill, but there was a big appropriations component to that. And you're talking about billions of dollars of funding through agencies like HUD for homelessness, for housing, funding through the Department of Education, funding through the Department of Transportation. I would draw your attention to that because there's a lot of grants that are specially designed for the COVID response that we would invite you to investigate. We can help you investigate, and we want to help advocate for Kentucky nonprofits as you help your communities access those federal funds.
Okay, great. That is great. The sense we have had mixed results around the PPP program. I think definitely what we've heard from nonprofits across the state is that the second round was easier and that they were able to find more banks. The first round, as you know, went very quickly, and many folks who had multiple banking relationships still could not get a loan processed. So I think, are very relieved with that. I know one issue now that is a concern of folks is because of all the issues that went the first round, there's now the question that they must, certify that they need the funds. And so where nonprofits are getting hung up on that issue is, does that mean if they do have reserves or do have an endowment, that would disqualify them? Because again, this is only a short-term fix, so they're very hesitant to utilize and wipe out all those funds. Do you know?
Yeah. This has come up quite a bit recently, and not just with nonprofits, but larger businesses that took out loans exceeding $2 million are now being audited. In one sense, I agree with the decision that Treasury has made to do just good governance and audits and make sure that, in fact, we are reserving these scarce resources. I say scarce, it's over $600 billion, but there's a whole lot of need out there. And we want to make sure, and Congress's intent is that the money goes to truly needy small businesses and nonprofits, not businesses that are larger, that have other sources of capital, access to the public capital markets. That's not what this program was for. This program is for Main Street businesses who are at risk of disappearing, literally disappearing, and nonprofits that truly need the bridge and the lifeline in order to literally just keep the doors open and keep people on the payroll and off of unemployment. So I think that's actually a good thing, that Treasury is going to be auditing automatically any of those loans in excess of $2 million. On the flip side, we don't want Treasury to change the rules in the middle of the game. And the frequently asked question number 31 in the guidance, that's the one that's gotten people a little bit nervous. And so if you've heard from your lawyers about that, if you've got capital reserves, and what I want to stress to you all is that FAQ, that frequently asked question, that guidance from Treasury restated a very important statutory provision that we put into this program to keep the program accessible and flexible. And what we said is there is no credit elsewhere test, meaning you don't have to prove that there is no other alternative source of funds. You just have to prove and certify necessity, that you're in distress because of this, that the need is greater. So I would argue that as nonprofits, you're in a much better position to make that case, to make that certification in good faith, to demonstrate the need that's out there, what you're serving, than say the real target of that guidance, which was larger for-profit businesses that have access to public capital markets that really can find other ways, so that we reserve this money for people like you, for
Right.
for organizations like you. So I wouldn't get spooked too much by that, because the real purpose of Treasury's guidance was actually to protect you all.
Right. Okay. That's helpful. Well, and and folks are putting into the chat box in particular, and I know this won't surprise you, our local community banks really shown through during this process. I think anybody who wasn't banking locally is probably rethinking that right now. So I think that has been a positive thing. Another question, and part of this gets back to the letter that we had over 284 nonprofits across the state sign on to that. We appreciate the opportunity to have a unified voice. Is the issue that even though they're viewed as large, there are a good number of nonprofits with over 500 employees. And so I think just this week, the SBA issued an interim final rule that appears to change the rules to that benefit. For example, like for Berea College or other private institutions who would not have to count students on work study, for example, in that $500 cap for PPP eligibility. And we think that's a good thing. We also know that there are a lot of other nonprofits who are just right over that line and don't have access to anything that is forgivable. Do you support raising that cap and see any likelihood, or what can we do for those kind of really mid-sized nonprofits who are really shut out of any forgivable programs right now?
Yeah, that is an issue. There were some exceptions on the 500 cap that related to like franchises. I am definitely interested in helping nonprofits that have, because of their affiliation rules or whatever, that they may be shut out.
Okay.
Can you give me some examples of some Kentucky-based nonprofits? So when I go back to DC, and I do expect another bill, give me an example or two of those that can't get the forgiveness piece.
Goodwill of Kentucky, for example, and they've texted in, they have 1,500 employees statewide.
Okay,
I know another is the YMCA, and again, that gets to your affiliate issue, but they're saying, for example, the YMCA of Greater Louisville has 2,000 employees.
Okay, so the YMCA, Goodwill, they are not eligible for the PPP because of their size.
Mm-hmm. Right.
Okay, yeah, that's a really good piece of feedback. Hunt and Dan, did you take a note of that one?
Another are community mental health centers, so a lot of those are, large for sure. So, and a lot of them look at those as quasi-governmental, but technically they're 501c3 charities. So New Vista, for example, yeah.
Okay, good. Yep, and so my staff is taking a note of those.
Okay, yep.
What we'll do is on that, the Small Business Committee and the Ways and Means Committee are committees of jurisdiction on that. We will definitely express our support for those modifications for nonprofits that have those large numbers.
Well, and I think there was some hope that the Main Street lending program might include them and be forgivable, but as you know, that didn't include nonprofits, so we were really disappointed with that.
Well, one thing, so now that I have direct jurisdiction over the Main Street program, and on that point, they're not, that program is definitely not a forgivable loan program. Right. That's a low interest rate, longer term loan. And Dan, could you jump in here? Are not-for-profits, are they totally shut out of that?
So on that program, yes, it doesn't include not-for-profits, but the Federal Reserve has indicated that they are going to be standing up a new similar facility with similar terms for the nonprofit sector. They announced that last week.
And what we'll do is we'll monitor that. We do have daily conversations with the Fed on these facilities. Just so you know, as part of the CARES Act, and this was the part that the Financial Services Committee wrote and had jurisdiction over, we put $500 billion in what's called the Treasury Department's Exchange Stabilization Fund to backstop and support these Fed emergency lending facilities and so the not-for-profit facility will have that taxpayer direct assistance support as part of it. But the unique feature of this is that we're able, because they're loans, they're able to kind of lever them up to even much more than $500 billion. So the reach of this, even though they're not grants, the reach of this could be quite extensive.
Okay. A final question about loans. The EIDL program, I think some folks are saying they got on to apply for that, and I think it's only open to agricultural organizations right now. Do you anticipate any changes or opening up there, or are those funds exhausted?
They are definitely not exhausted. In fact, there's from the fourth bill, the Paycheck Protection and Healthcare Enhancement Act, we put $60 billion into that. That program got in the very first bill, the emergency supplemental, we put about $1 billion in there, not fully appreciating how massive this crisis was going to be. And that was able to be levered up to about $7 billion in loans, but that was quickly exhausted, and the demand was far exceeded. So I know that there's a lot of nonprofits and businesses out there that applied and got no response from the SBA. That's because they just were overwhelmed. They didn't have the resources. So this fourth bill, $50 billion, it's coming online now. They've got a huge backlog to work through. This program is going to be a little bit more clunky and harder to access because it is all through the Small Business Administration. Whereas the PPP program, we delegated it out to private lenders across the country. That's not the way the EIDL program works. It works through the SBA. So there's a manpower issue right now. We did provide them with a significant bump in administrative support in appropriations, so they're staffing up on the EIDL. And I know that at this time, only agricultural business applications are accepted, but they're just working through the queue.
Okay.
And so applicants that are submitting their applications are going to, we are told they're supposed to be processed at first come, first served basis until the current funding is exhausted. We are having difficulty with the for-profits also getting information from Louisville SBA about where people are in the queue.
Right.
We're pushing them on that. And so if you've got an application in, please contact Anthony Allen in my district office. We're keeping a list, and we're talking to the SBA and trying to get time frame feedback on where people are in the queue. But that's just it's gonna require a little bit of patience. There's plenty of money in there now, but it's just a huge backlog.
Okay. Well, and I know go ahead, I'm sorry.
Sorry to interrupt, but just as you all may know, there's there's two buckets. There's the loans, but there's also the EIDL grants.
Right.
I hope that some of your group has received those grants because you're supposed to get those quickly.
Well, and they were surprises. I know a lot of folks just checked their bank one day and poof, there they were. And they'd not heard anything about the loan application. So I think we, Congressman, have had Mr. Robert Coffey with, who I think is the acting district director in Kentucky, on a number of times. And he has done his best to answer the multiple questions that we have, but even he doesn't have many of the answers. And so I think with a lot of the confusion around the guidance of what is forgivable, we're still really waiting on that. And he's coming on next Thursday, and we hope he will have the answers by then, but we realize he still may not. And then I think to your point about the EIDL grant, what we're hearing from our lenders is, okay, well, that part you're going to have to deduct from your PPP loan, and it's not going to be forgivable because those are double dipping. But I think the argument for so many is, but we're able to use those EIDL funds for other things that we couldn't for PPP. So, that's, I think, some flexibility folks are really hoping for, that they wouldn't have to look at it that way.
Good suggestion. That's one that I'll also take back. I can totally see that. EIDL, yes, is for non-payroll, and that's what the advantage of that is, and so that could help you also. Let me just raise with anyone who has an EIDL out there, if you've got an application and the application number starts with a 2 as opposed to a 3, you might want to check that, because if you've gotten in early and your application number starts with a 2, we would recommend that you reapply. And we can help you with that if you're a 6th district nonprofit. It's the applications numbers beginning with a 3 are the ones that are currently being processed first come, first serve until the queue and funding is exhausted. I don't know why that is, but my staff is informing me, just be aware of that. If you've got a 2, let us know.
Yeah. Oh, wow. I see many people right now running for their loan documents to try to figure out what was their number on there. All right, we're going to shift gears and talk about charitable giving. And of course, the CARES Act provides a $300 above the line deduction per household. You, Congressman, have been a great champion of legislative efforts in the past. At our request, you co-sponsored a number of charitable giving bills to create a universal deduction. So thank you for that. As you can imagine, we nonprofits want to see that amount raised. We would like to see it definitely more than $300 because we need the funds so desperately. And we also really would like to see taxpayers allowed to use that on their 2019 taxes when they file by that new deadline of July. Do you support those requests? Do you see any opportunities for that in this next bill?
Yes, and I've co-sponsored a bill that would make permanent the above-the-line deduction. Hats off to our friends at the United Way and others, and you, by the way, for getting us the data on the tax reform and the fact that we had a dip in small dollar contributions. That we do not want that, and especially now, the more we can get small dollar donors to help out, that's a big deal. So yes, whatever we can do to help on that, incentivize more charitable contributions to your organizations and be able to take credit for that, I'm for it.
Yeah, okay,
and we've co-sponsored the bill to make some of this permanent, not just related to the COVID response. I'd like to see that long-term permanent change. I want to also mention Section 2205 of the CARES Act. It increases the limitations on deductions for charitable contributions by individuals who itemize.
Yes.
For individuals, the 50% of adjusted gross income limitation is suspended for 2020. For corporations, the 10% limitation is increased to 25%. And this provision also increases the limitation on deductions for contributions of food inventory from 15 to 25%. So that's also part of it, just the $300 above the line.
Okay. Yes, those are all really helpful. Absolutely. All right, another issue, and most of my recent communication with your staff has been on the tremendous concern among nonprofit employers who take advantage of the option to self-insure as a way to really direct more of their funds toward their mission. And you probably heard us wrap up this part of the call with Deputy Secretary Benton on this very issue, because for these self-insuring nonprofits, according to the CARES Act, they're only being reimbursed for 50% of their claims related to COVID-19. And then, honestly, the ridiculous guidance issued by the Department of Labor that is really getting hung up on that word reimbursed, that is saying nonprofits need to fully pay the claim and then wait to get 50% reimbursement, which, in fairness, if nonprofits had the money to do that, they wouldn't need to be laying off or furloughing any employees. So there are really two issues we think here, and honestly, this is going to cause some organizations to have to close their doors. I mean, this is going to really hammer some organizations. So we think there are two issues here. One, what can be done ASAP to address the Department of Labor's guidance here?
Okay, this is helpful because I was not aware of that. So I would like to investigate that. That doesn't make any sense at all.
No, they had the money to do the reimbursement piece. They wouldn't be laying off. Yeah.
And Danielle, is the Kentucky Nonprofit Network affiliated with kind of a national group?
Yes, National Council of Nonprofits. Yes.
Okay. Does that group have, are they working on maybe a letter
They have done it. Yes, absolutely.
Okay. Is that letter closed? Have people signed it and it's submitted, or?
It has been submitted, and I think it's a national letter. You've gotten our Kentucky letter, which they are very, very similar. That national letter has been delivered, I think, to the Hill a couple of different times because so many national organizations keep signing on. So, but I will be sure to forward that to your staff.
I think I've got that, but what I mean is a letter to Secretary Scalia at the Department of Labor.
Okay.
What I think we ought to do is, I'm fine doing it myself, but I think it would be more powerful if we got, especially members of the Education and Labor Committee, bipartisan, to send a letter, and I'd be happy to sign it to express concern about the guidance and why it doesn't. In the real world, why it doesn't work. The PPP program, I wanted to make this point. The PPP program, really the whole purpose of it, and the reason why we have 501c3s eligible, and I'm glad that in the second round, we got more of the smaller dollar loans out the door. Yeah. We just ran out of money. And I agree with you that, by the way, the lenders, the credit unions, the community banks, they've really stepped up. I just want to let you all know that the first round may have run out, and you may not have gotten to all of you all in that first round, but it wasn't a lack of effort. They were telling me that they had people coming in at 3 a.m. on weekends. The only day that they didn't work was on Easter Sunday. So it just was a volume issue. And also the E-Trans system was a bit of a problem for the SBA piece as well. But anyway, I hope that in the second round, those applications are getting processed. But the purpose of that PPP program was to keep people on the payroll so that they wouldn't have to go to the unemployment office. Right. And there's such a backlog at the unemployment office. I know there's been some delays there too. So can I just ask anyone on the call here, I know there has been some layoffs, but has that prevented this problem from transpiring in the first place?
Oh, I'm certain of that. Yeah, I'm sure you'll see that pop in the chat box. We have people who didn't have to lay off. We've had people who've brought people back, which is fantastic. Now they're dealing with the reality of when these funds run out, what then? And that's a lot of what we were asking Josh about is how, you brought somebody back, how did they go back on? And he was giving folks like that. So yeah, we've had some folks that did not help, but I would argue the vast majority who were able to access PPP, it definitely did keep people employed. Absolutely.
So I'm just, for those who it did not, I want to know, because we need to know, why did it not help keep your employees on the payroll?
All right, let's see. I'm looking for information in the chat. So if you're someone who that did not assist you, if you will please type that into the chat so we can understand. Oh, the 500 employee cap, we knew about that, yes. Yeah.
Yep. Already furloughed employees.
So they'd already, and honestly, it looks like I had already really shut their doors. So,
that one thing I will say, speaking of the Department of Labor, a couple of things on the furlough, already furloughed. This has been a story that we've heard also from the restaurant industry, especially because they had to immediately lay off workers. And of course, the restaurants, most of them are still closed or only partially open. But the PPP has been frustrated by the PUA. So the PUA is the $600 per week, and some of those employers who offered to bring back workers, they declined because their unemployment benefits exceeded their wages. The Department of Labor has issued some regulations on that, and in addition, the Treasury Department has issued a frequently asked question guidance on that, and it does say, and this is important for you all to know, that if you've had to lay off or furlough workers, you offer them their position back because you've got the PPP loan. If you offer them the job back in writing and they decline to come back, then you will still get your forgiveness. You as the employer will still be able to take credit for that and get that part of the loan forgiven. Now, there's also an implication for the worker too. The worker then may be forfeiting their unemployment eligibility because you've offered them their position back. So just be aware of those regulations and guidance from both labor and Treasury.
Gotcha. All right, and then on the bigger issue of trying to get to 100%, do you see any likelihood of that in the next bill? So that, I mean, that makes all this moot for self-insured employers, that they are treated just like for-profit employers.
Yeah, I don't know. If we need to do it by statute, I can certainly weigh in on that on your behalf. I'd love to see labor fix that. And the reason why I say that is because I predict that this next round, and I do believe there will be another bill, but I think this one is going to be unlike the previous 4 efforts. This is going to ping pong a little bit, and so it's not going to happen next week. I think it's going to start next week, and it could be a little bit more delayed and finally get signed into law maybe more like June. So I don't want to, so I'd love it if we could get the DOL to fix this before the next bill. I don't know, it could happen within a week or two, but I would like it if we could get labor to fix that.
Well, you know, we think the short-term solution is just as you say, if labor can be very clear about what states have the flexibility and authority to do, and if, you know, Kentucky can be able to delay payments for these self-insured nonprofits, you know, for whatever period of time, that gives time for new legislation that might, you know, if we can be successful in our advocacy work, get to that 100%. So yeah, we're just at this point trying to hope that there's 2 pieces here. One, to buy some time and get some flexibility in the existing guidance. And then number 2, you know, to get it bumped up to 100%. So those are just, and you know, yes, it doesn't impact every nonprofit in Kentucky, but it's an enormous amount of organizations. And I think the ripple effect is the concern, because when some are shutting down, it's, you know, then that carries over to other organizations. So
I can see how it's a massive issue for the folks like Goodwill and YMCA that don't have the PPP. That is a real problem. I would say the short-term answer would be, I would if you've got a PPP loan, make sure you do offer in order to get the full forgiveness available to you, offer that position back to the laid off employees. Because you'll maximize your forgiveness, and hopefully that means you'll have less unemployment claims to contend with.
Okay.
I take your suggestion. I will advocate for you, but that would be in the meantime, that would be my suggestion.
Okay, no, very, very helpful. All right, another big issue that folks are really concerned about, and you probably are not aware of this fact. Yes, charitable giving matters to nonprofits. It's very important, but about 83% of nonprofit revenue actually comes from fee-for-service revenue, and that includes contracts with state, local, and federal government. So the concern around local and state government finances is enormous. And so, as you know, there's an unprecedented show of unity among the governors with their National Governors Association letter. You know, what will you support with regard to aid to Kentucky and our cities and counties, and ultimately the way this trickles down to Kentuckians?
Well, I had a good conversation, actually several, yesterday with Mayor Gorton. This was one of the topics that we talked about. I've talked to many of our state and local officials about this over the past several weeks. So Kentucky has its allocation from the direct assistance. I want to point out that the CARES Act provided more than $760 billion to state and local governments already. That may not cover everything, but that money has not yet been spent. I mean, a big chunk of it has not yet been sent to fill the shortfalls right now. The good news is that Kentucky does have its allocation. I think they're looking, as I understand it, Frankfurt is looking for a little bit additional guidance from Treasury on how they divide between the state and the local. Louisville was the only municipal government that was eligible for a direct allocation. But Kentucky will be dividing its share between 55% to the state agencies and then 45% to local. And that the local governments have not yet received that. So if you're seeing interruption from your funding from local governments right now, that may be part of the reason, because they don't have their help yet. That's part of the $150 billion that came out of the what's called the Coronavirus Relief Fund. But I want to emphasize and underscore that $150 billion is not the full sum of the relief to state and local governments. And so the state agencies that you all work with and that you all receive funding from, they're getting other funding from different sources as part of the CARES Act. For example, and in addition to the unemployment insurance help, the healthcare and the hospitals, $175 billion, increased Medicaid funding, $50 billion. FEMA, the $45 billion in CARES that went to FEMA, a lot of that is going to state and local agencies. And so the grants there should be something that you communicate with, the FEMA money that a lot of these state agencies are getting. Education, if you're one in an education nonprofit, $30 billion to state and local school districts. That's COVID related. So your school district should be getting replenished as part of that. Mass transit, $25 billion to state and local governments across the country. Again, this is above and separate and apart from the $150 billion. And again, a lot of this money hasn't yet reached these local agencies yet. So we need to make sure we recognize that this money is coming, hasn't necessarily been allocated or down to the local level yet. State and localities have received $11 billion for testing. HUD, this is a big deal. $9.3 billion. We have jurisdiction over HUD too. So if you're in the housing nonprofit space, we can ask for a little bit of extra attention as this money gets funneled from HUD to the local housing authorities. But there's a big jump in community development block grants specifically for this to provide communities and states with funding for senior citizens, homeless, public health services. There was a $4 billion for homelessness. So $4 billion in homelessness assistance grants to state and local governments, Native American programs, and also the local governments have received their housing assistance for people with AIDS. $5.4 billion for programs supporting children and families. I saw Jill Seifried on the call for Prevent Child Abuse Kentucky. I would look into this, Jill, funding for child care, development block grants, direct funding for local community-based organizations, social services. There's low-income home energy assistance grants, child welfare services grants. Also, a lot of people don't know this, but CDC, there's $2.5 billion from CDC for state and local preparedness grants. That's also combined with not just the CARES Act money, but the Families First Coronavirus Response Act money. $1.5 billion in economic development grants. That's something we can look into for you. The Department of Justice, they got a lot of money. And if you're in that area, you might want to investigate. And again, we will help you investigate these grant opportunities that are separate and apart from the money that went straight to the state and local governments. Just a few more examples. Extended care facilities, arts and humanities. If you're in the arts and humanities, there was $150 million additional funding for National Endowment for the Arts and National Endowment for Humanities. And there's others. I'm just giving you some examples of that so that you know that there is money that has not yet been allocated to your kind of government partners that's coming.
So you feel like, and I hated to miss the call yesterday, but in the case, for example, of LFUCG, who's had to, their budget or proposal was incredibly lean. Do you feel like these other funding sources are going to be able to pick up the slack there? Or, I mean, there are a lot of organizations in a panic.
Well, that money that that list that I went through right there, that does not and will not help, let's say, Lexington with their budget shortfall that's as a result of lower, less payroll.
Tax revenue.
It's not the money that we provided so far to the state and local governments is not a gap filler for their budget shortfalls as a result of lower revenue because people aren't working. That is true. That doesn't fill that in. It's just supplemental to help the agencies with more additional help. One thing we brought to the attention of Mayor Gorton to help her with that problem, their budget shortfall problems, and what we've done, just like we've done with the Main Street program, part of the $500 billion for the Exchange Stabilization Fund, there is a municipal liquidity facility that we set up through the Fed. And Lexington, the size of Lexington is eligible directly for that. And Lexington is eligible for $121 million in support, which is quite a bit of help through that. We're working with the city of Lexington, and it's not a grant. It's a lending facility that has been stood up, and it's a lower cost of borrowing for the city of Lexington and for other municipal and state or local governments throughout the country. But it will help the municipal bond market, and it'll be a kind of a bridge on their existing issues. Now, one thing I will say also, the $150 billion in direct assistance, and Lexington will get an allocation of the 45% that's coming from Frankfurt on this. And if you're outside of Lexington, if you're in other municipal areas, local government areas, what we've done, what Treasury has done on that is they issued regulations or guidance last week or earlier this week that will allow considerable additional flexibility for the local governments to use those funds, especially for public safety. The largest part of these municipal budgets is the fire, the police, the payroll.
Right.
So if a city uses that to backfill their payroll on the fire and their police, if their social services budgets, that can help their social services budgets. That can free up for their social services budgets. So we think that will help them. Having said all of that, I know what you're asking for, and that's more appropriations. And what I will say is that I think this next round is going to take a little longer. Mm-hmm. And I think at the end of the day, there could be more funding, but it's probably not going to happen with this bill next week that's going to be on the floor. And that bill is going to be a partisan vote, but don't panic. Okay. Just think that this one, unlike the previous ones, this is going to start partisan, but it's going to work through the process.
Okay. What do we call that? Sausage making, right? Well,
more.
Yeah, it's been incredibly helpful. And I know, again, you've got a great team, so I know you've got to hop off, but you mentioned a lot of grant programs. Something we didn't get to talk about where organizations are really, especially those who are essential and have been open, those who are moving to reopen, needing to access PPE, disinfecting supplies, of those things that your staff can help us try to access?
Yes, absolutely.
Okay.
And on the PPE side, we have had multiple calls with FEMA, mainly for our hospitals and our nursing homes, but we know that you all need it too.
Yes, domestic violence shelters, homeless shelters, yes, yeah.
Absolutely. And so what we have impressed on Admiral Polachek, who's running the supply chain. We've had over 120 flights from overseas manufacturers, plus the DPA domestic production surge.
Okay.
And we want to make sure Kentucky gets its fair share. So we've asked the Admiral to look at Kentucky. We've given him our burn rate.
Okay.
We are anticipating fruits of that coming to the Kentucky Department of Public Health, which then distributes out the PPE through the departments of public health. If any nonprofit wants to access some of that, please call us, because we've helped the state get more PPE. We want to weigh in for you with your local public health department to try to get you your share.
Okay. Yeah. And again, for some organizations, it's a need right now. For others, it's as they're trying to open up and comply with a lot of the new guidelines. And that's just an added expense and can't get it, can't locate it. So that would be incredibly helpful. Well, again, Congressman, thank you so much for being on. I know you've got to hop off and do more work today. But again, we really, really appreciate all that you're doing for us and for sharing time with us today.
Yeah, Danielle, thank you again. And my staff just, they're doing a great job. They told me that that the Kentucky Chamber also is another source for you all.
Yes. Okay.
On PPE, so check on that. So let me just, thanks for including me on the call today. Thanks to my staff for jumping on as well and helping us register these concerns with the relevant committees as we look to the next round of legislation. But most importantly, guys, hey, you guys have really stepped up. Thank you so much. I know you all are working really hard and in some cases putting your own health on the line to help other people. So we are very, very grateful and we thank you for everything you're doing.
Thanks, Congressman. Stay safe.
You too. Thanks,
All right,
guys.
thanks.